This is Christopher Holcomb. Welcome to another great episode. I want to keep you guys updated on my journey as I go through real estate. Pretty much things are going pretty well. Beginning of the year, a lot of things are transitioning. I wanted to touch base because a friend of mine, I'm trying to help out. They're underwater with their mortgage, so I'm giving them, or at least working with them for different options of what they can do. And I was like, well, this would be a good topic to let everybody know. And pretty much, I guess a lot of people should be educated in what options they have if they want to keep their house, or if they want to walk away from their house, or if they're looking for ways that they can pretty much keep their house without staying underwater. So I want to share a couple options pretty much, because we've been working with him regarding options. There's a couple I've went through also. So just want to give you guys an update on that. I'm helping this guy out, so that's one of my things of going through my journey. People know I do real estate now, so even your friends be like, hey, I got this problem. They bring things to you, which is kind of refreshing nowadays. One of the things, and I guess the initial thing that most people are getting now if you're underwater with your mortgage, is a loan modification. And I even went this route a while ago, a couple years ago, and to be honest, I'm not a fan of it. Not saying it's the worst thing. I know a couple other people I know that are working on it now also. But the way I feel is loan modification is the only thing is it's a brand new loan, it takes a percentage, and they pretty much, whatever you have to pay, they roll that on the back end. So it's really just another mortgage with lower percentage. You still owe the same amount or even more. And depending on your situation, you might want your note a little bit lower. Make sure it is. Do your due diligence when you're researching those possibilities. I even hear they're doing contributions where I don't know what the contribution is for, but you give $10,000, I guess, if you don't qualify, so you can get the loan modification, which I think still defeats the purpose. You got a deed in lieu. A lot of people don't know about that, where it's like really just handing the keys over to the property. They research it. It's a process of a foreclosure, but you don't go through the process of a foreclosure. You pretty much walk away, but you give the property back to the mortgage company. So then you're good. They have the property, and it works out for everybody. You don't have to go through the situation of paying them, keep paying for the property. You have to go through the situation of going through a sheriff's sale where they kick you out of the property. None of that. So that is an option. I would say research this. These are just options. Whichever way you look to do what you're trying to do with your situation, I would say definitely go into it and verify what would be best, because every mortgage company treats differently. I would talk to realtors too, because they may have some insight. The other one is a short sale, which is a form of foreclosure where you can sell the property at a lower price, market value pretty much. To me, that's a good option, because usually if you're 4 months behind and you're going through a short sale, it usually takes 6 to 8 months or even longer to get that process going. Most of the time you have to find a buyer or have an agent find a buyer, so that gives you time to pretty much stockpile the cash flow you might have been paying on that mortgage to move somewhere else. A lot of people is doing this nowadays. There's a lot of short sales going on, which is definitely good for investors. A lot of people don't want to wait that time, but a lot of times if it's a great deal, you may have to wait for great deals like that. But as a homeowner, it's a good opportunity if you're not trying to go through the foreclosure route, which is the next one, which is a foreclosure. And you know how that pretty much works. It kicks you out the property because you can't pay your mortgage anymore. So you have to definitely know your time frame with that. You still have 6 months, I believe, after the foreclosure goes through to reclaim your property. So there's a lot of options out there. You guys have to verify what's best for you as an investor. If you don't know these options, you should research them, because there's a lot of foreclosed properties out in the market, a lot of short sales. So there's a lot of options for us as investors to find properties that may fit our criteria that will be good. It's always good to get realtors that may know or be experts in that field, because they may have access to properties that's going through that process, or maybe past the redemption phase. There's a lot of things you need to understand in these processes also. So I just want to give you guys an idea of what's going on with me. Still doing my marketing, still working on properties. I'll give you guys an update on that on the next episode. But wanted to get this out here because it's vital information for people nowadays, even though they hear a lot about different options. Like I say, do your due diligence, research it, ask several questions, talk to several different people, ask your bank if you got a mortgage, and verify what your options can be. So, as always, I appreciate your feedback. Definitely would like to talk to you guys as I do, and we'll go on from there. And it's another great episode, and I'll talk to you guys later.